Jesse, how we feeling, my guy?
Man, another week on the grind, brother. No complaints. You know what I'm saying? Making things shake. How has Vegas been treating you?
Bro, hotter than a runaway slave ship. I have rarely experienced heat like this, and where it's 110 every day. It's still 95 at 1 in the morning. It's been out of control to have a professional event in that capacity. But, comma, it's been a phenomenal opportunity to really pour into securities advisors as well as life insurance and annuity advisors. So what I was doing is teaching them how to be more holistic in their approach with working with their clients. And then, we talked about taxes because most of them, they understand taxes a lot better than a lot of the lame CPAs out here as far as making something actionable for the client. But it was awesome. It was awesome, man. It's always nice to rub elbows with the top leaders in the country, and you get inspired. You see people are doing $800,000 a month and stuff, and I had two of my best crush it this month. Jason and Kristen both did multiple five figures this month. So getting after it, brother. And as you guys are listening, you can tell we talk about a lot of actionable information that you can do something with. So I want to go ahead and get our disclaimer knocked out so we can get into the episode and really get to it. So our disclaimer, this is not business or investment or portfolio information. This is meant to be given to you for entertainment and educational purposes. We always highly encourage you to work with licensed professionals, bonded if needed be, and they have to be a professional with a long track record of success. The even more important part is to do your own research, because as we learn more, each one, reach one, teach one, because that's how we learn and grow as a community.
1000%, 1000%. And as we speak to all of the things that are kind of happening in the world right now, the importance of community, cannot be overstated. Like it's us, how we collectively come together during these times are going to be the test to our resolve as we continue to kind of transition through a constantly evolving world. So
yeah, because it might be bigger than you, Jesse. It might be bigger than me, but it ain't bigger than you and me. Bluetooth, brother.
See, and that's why we got to get back on Riverside, bro, because that would be the Don DeMarco drop right there. You know what I mean? Them yes, bars.
As soon as we get back in the same state, it's up. It's on Riverside because he's working right now in North Carolina. I'm working in the beautiful and blazing Las Vegas, Nevada. So my guy, Jesse, he is the founder and owner of Bullseye Consulting. And would you mind telling people what you guys do over there? Because you do incredible work.
Unfortunately, there are too many business owners that become prisoners of their own passion, where they create a business entity that overconsumes every facet of their life. What we do is transform that mere existence to a thriving life of truly being able to step away from the business, and that business operate autonomously on business systems and processes that ensures that every member of the team understands the assignment and how their direct activities contribute to the top or bottom line within the business through, again, an intentional business framework that delivers consistent profitability through in and throughout, and which then gives us the ability to hand them off to you to.
The fastest way to grow your wealth is to cut your tax liability in half. So I'm the managing partner at Tax Erasers, and what we do is proactive tax planning. That means we are looking into your personal, business, growth, as well as estate planning and retirement needs. Because when those things are aligned, each dollar can work together instead of working against each other, which is what normally happens. The number one question I ask people: when is the last time your tax professional gave you new ideas to save money and make money? And usually, after they stop laughing, they say never. And that's how I know you are overpaying the wrong professional. There is a place for tax strategy. That's what we do. And there's a place for tax compliance. So, with that, we are killing it because I don't know if you guys know this, if you've been around for the last 1,500 years, but the number one asset to own is a cash flowing business. It is the best way to scale wealth. It is the best way to change your tax bracket, and it's the best way to ensure multi-generational wealth, if that's something that's important to you. Now, Jesse, we were talking in pre-production a little bit about, a little bit about what we went over in the last episode, which is SpaceX's IPO. It's one of the largest in history, over 2.5 trillion, and how it's starting to affect you. Because we did the episode and you were digesting it, and then you went to work with all your business consultants, and now you're coming back and seeing the news spin, and you're hearing all the water cooler talk. So, what do you think has changed, or how do you feel affected since that time?
The headlines are painting a story that is not going to materialize for a lot of folks. There's going to be a very small percentage of people that are going to tremendously benefit from what the headline is saying. And I feel as though there's going to be a larger pool of folks that don't actually understand what's going on. Like what led to the valuation being what the valuation is, as far as the changing of the rules and, those back office conversations and handshakes to waive certain laws that are intended to protect people. A lot of stuff has kind of been set aside in order for this massive valuation to happen. So it just feels like more than ever, people are being set up to have a lot of loss, man. That's what my spirit is telling me. But I'm also not as versed in the stock market and how all of that stuff actually plays. But just, again, understanding that rules have been changed in order for this to happen. Rules that have been put into place in order to protect the common consumer. Those rules have been changed to create this. So I can't see how that ends up being beneficial to the masses.
I couldn't agree more. A lot of times, if you read any economics book, they'll tell you deregulation drives economic growth. And while that can be true to some point, if something is completely overregulated, where it's stifling the ability of independent individuals that are citizens to create business and to engage in free commerce, that's probably when we need to have discussion about, hey, we need to loosen these guidelines to allow economic growth. What deregulation should not do, in my opinion, is sidestep sensible guidelines and protection factors that are made to keep citizens in a positive place. Whether we're talking about health benefits, or in this case, we're talking about their wealth, we're talking about their retirement, we're talking about the status quo of the stock market. So we are currently in this space where, no pun intended, SpaceX sidestepped all the traditional guidelines to getting an initial public offering, which is where you start up a company or you acquire a company that is private and you scale it up and you decide, you get to a point where it's big enough where you want the exposure of everyday consumers to be able to buy shares of your company. And that way you can raise even more capital to do what you're supposed to do, which is to bring a product or service to market. So there's nothing wrong with doing an IPO, but with an IPO, there are normally so many rules because you could imagine, okay, this is the first time this is going to hit the market, the stock market. The propaganda around it and the marketing of what it could be will greatly factor into the prices, where we see prices go through the ceiling and then we see them drop and then we see them consolidate to where it really should be. And if it's a great company and you're planning on holding this for 10, 15 years, it's okay. You probably got it at the most inexpensive price that you'll ever get, outside of some market variation. But in this particular case, SpaceX didn't hit any of the metrics. So normally there's a seasoning period where it could be 12 to 15 months before a newly IPO'd company can go into a major index. An index is just a bag of stocks. And we have something like the NASDAQ 100, that's the top 100 tech stocks. We have the S&P 500, that's Standard and Poor's top 500 companies in the United States. So this is Meta, this is Apple, this is all of those guys that, short name is like Prince, all the companies that in that manner that are in the S&P 500. When an index decides to bring a stock in, there's a big pool of money that's already existing in that index. The S&P 500 is normally around $13 trillion. If we're in a really bullish market, it could be $16 trillion because it's one of the safest places in the world that you can put your money. So other countries will put their money in the S&P 500 because it's safer than investing in where they live. That's how privileged we are in the United States, and we don't even realize it. Now, with this IPO, sidestepping, they didn't have to wait for the maturation period. They didn't have to hit a certain mark. And then they also didn't have to give enough float. And that is the giant concern I have. Float means we have this company that's going public. You don't have to make it 100% public because then you're at risk of a hostile takeover where if Jesse and I have enough money, we can go buy this company and we could take it over because we have the majority stake of the shares. So that's what a hostile takeover is. They won't put you in a position where you have to do that and take that sort of exposure and give all your equity up. But normally it's at least 10%. You got to give up 10% of your company to individuals and institutions to be able to buy. And 10% is a pretty tame number. If you're holding on to 90% and the 10% that's in the market is driving the real life value of your private shares, that's a great deal, right? Well, SpaceX only released 3% in float. And for it to work inside these indices, for them to buy it, there's something called weighting, where it is WEIGHT, not as in serving food. The weight, some stocks can be weighted differently. So, for example, it could be a 10% float and it can have a weight of 5 times because it's doing so great. Like, let's say it's NVIDIA, and NVIDIA's killing everybody with their chip. Nobody's close. Okay, we're going to weight this 5 times. So 5 times 10, it's going to be treated like it's 50% of the stock to be purchased by the index. S&P 500 initially went with this, and then they shut it down. They said, nah, we ain't doing this. NASDAQ 100 stuck it out and did this. And we're still waiting to see exactly what the multiplier is because it hasn't been released yet. But now, passive investors, so that's people with an IRA, a 401k, a 403b, a 457 plan. All these plans where you don't directly manage your money, you just kind of pick something. These companies buy all these options to create products to give you options of what you want exposure to and what you don't. Since you're a passive investor, you don't get to say, hey, don't buy SpaceX. Since NASDAQ 100 is a part of one of your indices, your money, a portion of it, is going to pay this. So people's retirement money is the liquidity factor for Elon. Otherwise, it wouldn't be enough money to buy enough shares to give him the valuation to be the first trillionaire in the world. All of that was built off of working class people, teachers, firefighters. We're talking about military personnel with a thrift savings plan. So this is getting purchased there, and then also some life insurance policies and annuities that have exposure to NASDAQ 100 because they have to buy into it also. So the troubling part about this, SpaceX is not a successful company as a whole. It is 3 different companies in a trench coat. So we have the reusable rocket company, very profitable, did about $4 billion in profit. Pretty good. Then we have Starlink, very, very profitable, $11.4 billion, and they're netting about 63% to 67% profit on it. That's amazing.
So, I didn't know that. So, because I thought Starlink was its own thing. All of them are grouped together?
Yes. They're all grouped together, brother. This is great because it means like picking up what I'm putting down. And then the last company is his AI company, the XAI, which is a dumpster fire as an investment. Is burning $1 billion per month. So if we do the math on this, it's burning more money than the entire entity is taken in.
Is that the source behind Grok?
So AI is used in Grok, and then it's used in a few other things as well.
Okay.
Yes, sir. So here's the part that makes it even more troubling. This is not the only company that's doing this right now. SpaceX, we also have Anthropic, and we have OpenAI that are all doing their IPOs 2 weeks apart. And we have these indices, which is the plural of index, that changed the rules to allow them to IPO now. And they changed it after the fact, after the company stated, hey, we want to IPO, we need some help. Then they're like, oh, we're changing this. That's how you know it is the most inside of inside cooking ever possible. It's out of control. People are like, what about Anthropic? Like, it's a great company. I think Claude is a phenomenal AI tool. We both use it for business. It helped me build my website. Like, it is an incredible tool, and they're fairly profitable. But we don't know how profitable because it's been, not only is it a privately held company, but they're in this giant circle with Meta, with all these different AI companies and all these other tech companies who have just been paying each other, including Amazon. And we talked last week about how almost all of them have negative capital expenditures, which Jesse could talk about at length. But in layman's terms, the money that you have in your company, when you invested into something, what are you getting out of it? You think that's a fair way to describe CapEx?
Mm-hmm. Absolutely. Yeah, because the whole idea behind CapEx is to spend with the intent of growth, right? Like you're investing in, so a trades-based company may purchase additional vehicles in order to, by growing their fleet. The idea is they're going to be servicing more customers. By servicing more customers, it grows revenue. When you look at SpaceX and all of these other companies that you just spoke to, it takes a significant amount of capital investment in order to be able to produce the revenue to the volume that you're speaking of. You don't just do that with what's sitting in your garage. You know what I mean? Like it takes actual investment in order to produce that scale of revenue. So CapEx is all about taking capital and allocating it towards equipment and otherwise resources that are going to increase the amount of revenue that's coming back in.
My brother, thank you. Thank you for clarifying that. So in your world as a business coach, if someone told you, look, Jesse, I'm about to do an IPO with my company, and you look at the numbers and you see their CapEx is upside down, what's the conversation that you're having with that person?
What's the plan for growth? Like because coming to market is coming to market. But once you're in the market, how are we going to continue to scale? Or is the game plan to enter the market and remain flat where we are? You know what I mean? Like, well, actually, additional context, because by entering the market itself is going to create a lot of capital will be available based on the IPO. However, continuing to show true growth, not from investors throwing money into a pot, but the company itself being able to produce additional revenue is a whole different conversation. So if we're not talking about what it takes to scale, to continue to grow, like, do we need to purchase additional facilities? If we don't need any additional, what's the plan to grow?
Right.
That's where my mind goes.
Right. No, 100%. And I asked you that question that way because I had a feeling you would answer in this manner. For a normal business, you can't go to market with a negative CapEx unless your plan was just to go to market, get some money, and you're exiting. If that's what you're doing, cool. But we didn't even have to go to market to exit. We could have got you, we could have pulled on the right pulleys and triggers to sell your business, and we could maximize that EBITDA. We could maximize your multipliers. We could make sure you're best in class for the size that you are, so you could get the most money out of it. And Jesse would do all that stuff for you. And then I would provide the tax plan so you could so you would pay 0.1% taxes on your capital gains. Awesome. We could do that without going to market. But when you have the amount of influence that an Elon has, you can do this. And even if things crash and burn, he's a trillionaire, which is absurd. Even it feels wrong, even coming out of my mouth right now, man. It's absurd. So some actionable things, because when you get on our podcast, we don't bitch and moan. We're not complaining. We are vigilant and making sure that we're seeing the world clearly and that we're communicating it with clarity. But on top of that, we're always going to say what you could do. This is where I tell people you have to have a balanced portfolio. When they hear a balanced portfolio, they think of a pie chart and they think of the guy at Fidelity or whatever coming. See, you got some bonds, you got some stocks, you got some gold. It's not real gold. It's paper tracking gold. But you got some exposure to real estate. So I really own real estate? No, but the paper follows it. See, you're good. You're good. That's not having a balanced portfolio. That's having exposure to different stuff because you hope and pray that they're not correlated, where when one comes down, it'll bring another down. That is what most people are doing. When I say have a balanced portfolio, it means you have different types of assets. Everything is not paper. Some things have to be real, as in real estate, having cash flowing real estate, having land, having real gold and silver that you could hold in your hand if you want to, or if it's an IRA, you can do a rollover from your IRA to gold and silver that's stored in a secured facility so that you're compliant with the IRS. So they know you didn't move the money into gold and then they gave you the gold and now you're running off on the plug and you're doing different stuff. I wish we could do that. That would be amazing. We could get so much leverage and build so much wealth for people, but that's not what the plan's designed to do. One of the parts of my training piece, I was so grateful that we had an experienced guy there, an experienced advisor with all of the securities licenses. I was telling people, when you hear qualified plan, some of you guys get nervous. Or when you meet somebody, when they have an advisor and they have a securities license and you don't, you guys get nervous. A qualified plan does not mean it's qualified to protect or serve that citizen. It doesn't mean it's qualified to make sure it never runs out of money. It's not qualified to protect them if the stock market has volatility. It is qualified to generate revenue for the United States government. It's an IRS qualified plan. What does the IRS do? They generate income for the government. So when I say that, people are like, so that's all a 401k is? And I was like, a 401k is not even a plan. It's a code. Where you work, they've adopted a particular plan, and it can vary depending on where you work. Well, don't they have to have the same investments? Absolutely not. They could be completely different. So what I'm telling you is that you cannot bank your retirement off of something with so many variables. If you don't know what taxes are going to be in the future on your retirement, how can you plan accordingly? You can't. You don't know how much money you're going to pull. For a lot of people, and we have all these great white collar guys and gals, they have $3 million in their account because they were taught the Dave Ramsey thing. Look, get $3 million in the account and then pull 4% a year. You pull 4% a year, you get to live off of $120,000 a year, which for most people, if let's say your house is paid off, car's paid off, and whatnot, and you have Social Security, you could do it. You could do it and you could live a really nice life. Here's the problem. When they got that 401k, when they got that IRA, no one talked to them about future tax consequences. No one talked to them about sequence of return consequences. No one told them being a passive investor that some crazy guy could come in, push a bunch of stuff through the SEC, force their money to buy into a company that's not very strong right before the stock market crashes, turning them into the liquidity event. No one has that conversation. When you sign up for a 401k, you have the HR person come and say, hey, fill this out by Friday or you don't get to start this year. And you go, okay, so what should I pick? Oh, I'm not a financial professional. I can't tell you that. Oh, so what'd you pick? No, I'm legally not allowed to tell you what I picked. But make sure to have it done by Friday, okay? And people are supposed to live forever off of that. That's where I don't want to go through the whole thing because we've done it here on this very podcast. But this is where ERISA, TAMRA, TEFRA, and DEFRA come from. TAMRA is the Technical and Miscellaneous Revenue Act. Notice the word revenue is in it. It was changed so that money had to go into equities so that companies didn't have to do pensions. And that's where like ERISA comes from, which is like the employer retirement insurance deal, where it pretty much took companies off the hook from having to pay a pension for forever because it was too much liability, because they weren't putting the money in places that were really generating income. It's really like the company is paying from their ledger for this employee that's worked 20, 30, 40 years, whatever the deal is, normally 40 years or more. So people aren't having these conversations because when you have it, you realize that these gurus that people follow aren't having a nuanced conversation. One thing that Dave Ramsey consistently says, okay, you're a nerd in the basement. You're a virgin in the basement. You know, as soon as someone starts pulling up numbers on him and they say, Dave, I have my series 6, 7, SIE, 22, and 32. I also run a real estate fund and a hedge fund. What you just told these people is very incorrect. Oh, you're a virgin in the basement. And then he will quickly pivot to this factor. With my radio show, I help more people in one day than you do in one career. And that's the key thing. They're looking to make general statements to group everybody into one box. Because if you're actually doing any sort of business planning, financial planning, tax planning, is nuanced onto the person or business that you are working with. But with that nuance, you'll lose people. There's plenty of businesses that are not qualified to work with Jesse. They just aren't. And he would not waste his time trying to help them. There are plenty of owners where their business would qualify, but because of their mindset, they are not qualified to work with Jesse. They are not qualified to work with Bullseye Inc. Bullseye Consulting, excuse me. And then it's same thing here. There are people that I've sat down with and we could save them over $1 million a year in taxes. And mentally, they were not there to go through the steps, or they were afraid of the IRS. The IRS is no one to be afraid of as long as you're moving with transparency and you're following the Internal Revenue Code. You have compliance officers like we do. We're still hiring. We have 22 CPAs. We're about to have 27. We have enrolled agents. We have tax attorneys, estate attorneys, and we have court attorneys as well to tell us what judges feel and think about the interpretation of the law or code. So, I mean, we got it wrapped up all the way around. So I say all that just to say, guys, when everyone is telling you the same thing, you have to dig deeper. If it's one size fits all, you should never fit in.
Bruh. And when we talk about fitting in, because one of the things I can't even lie, one of the things that kind of is disheartening to me is I live my life through the lens of a glass half full. Like that's genuinely how I see life. And then we get here on this program and we talk about all of the things that are going on in the world. And oftentimes I'm not speaking from the perspective of that glass half full, which is truly how I live my life. Like off of this platform that we on, like that's genuinely how I live my life. That's how I see it. That's how I talk. That's how I move. That's who I am to my spirit, to my core. However, understanding how all of this stuff that we talk about actually works and the amount of people that are going to be displaced by it is difficult for me to just speak about the glass half full side of it, because media does that. Like they got that part covered, the glass half full part. But the glass half full part is a breadcrumb trail to disaster for the folks that are not prepared for what's coming. And that's
a bar.
I feel like it's my responsibility as someone that like kind of understands how all this stuff comes together generally to speak to it. But in that, one absolute positive that I can speak to is relative to business, because we can control these pieces when we're intentional. You know, Earl, you mentioned earlier, as far as owning a business being one of the cheat codes to building generational wealth. Truly, it really is. Well, anybody can go to their Secretary of State and, well, I don't like speaking in absolutes, but most people can go to their Secretary of State and file for an LLC, and ta-da, you are now an entrepreneur, technically, right?
Mm-hmm.
Obviously, we know better than from being in the field, in the arena. There's a lot more to it than that. One of those things being understanding how much that it actually costs to produce whatever it is that you have incorporated your LLC for, that service or product that you intend to sell, how much that costs. So I literally see this client after client after client after client after client after client. When you actually sit down and ask them, like, what goes into your pricing model? And, you know, once they get past the standard entrepreneurial jargon that, like, it's entrepreneurial word vomit, where, because the intent is to mask the fact that there was no logic that went into their pricing model at all, outside of whatever that somebody is willing to pay. like that was their entire pricing model.
The market's really supporting it right now. And it's like, well, you're selling it, so I would hope.
that has not, like, I mean, obviously that matters, because if people are not willing to pay the price, then yeah. But like that's a whole other challenge. If folks are not willing to spend the money, like how the value proposition is articulated, you know, that's a whole different. And now we're talking about marketing and all of that stuff, which is, again, a whole other conversation. But pricing itself, when we're not factoring in not only how much that it costs us to produce whatever it is that we sell, but most importantly, how much that it's going to cost a collective team of folks to produce whatever product or service that the company has been incorporated for.
Mm-hmm.
It is a fool's errand to hop into business and just merely be thinking about what it takes for the founder of the business to produce whatever it is that they produce. So, for example, I'll speak for myself. With me, if I just priced my consulting on what I'm able to do, then I could keep that price point very low, because I have invested so much into myself and my own capabilities to deliver that I can amass a plethora of clientele just off of what I'm able to do. Now, when it comes to actually growing a team, like actually scaling and getting to the space where my team is now handling the demand that has been built on the back of my investments into what it is that I'm building, that becomes a whole different conversation, because they have not invested into themselves the way that I've invested into myself for me to be able to produce the way that I produce. So I have to take into account how my team in the future is able to produce what I produce and price accordingly. So, for example, I'll keep it to trades, because I primarily work with trades-based businesses anyway. So if we're talking about an HVAC company, and the founder of that company has been doing HVAC since Moby Dick was a minnow, that means that whatever HVAC related issue that they are dealing with, when that master technician, when that founder walks in, they're going to be able to knock that shit out just like that, done, because they have invested in themselves and they can get it done in a very short amount of time. Now, when we fast forward to the space where that same HVAC company has built a brand that now people recognize the brand and they call that HVAC company without a question, because they know that the service level is just chef's kiss. magnificent. But now they're sending out a technician that has been operating in the field for, let's say, 3 or 4 years. That technician is not going to be able to get out there and diagnose and correct whatever issue in the same timeline as the founder, because there is a lot of investment that has gone into the founder being able to do what the founder does. But if their pricing structure is set up based on how long that it takes the founder to get it done, then that means that every job that they sell is not going to be profitable, because it's going to take a lot more time to produce what the founder is able to produce, because the founder has invested in themselves to become that. So again,
Bro, that's powerful. Go ahead. I don't want to cut you off.
No. What were you gonna say?
That's powerful. I hope that they don't miss that. He said he's creating his pricing model for what is coming in the future. The most successful entrepreneurs, artists, athletes, they always begin with the end in mind. That is what they do. So he's saying, I'm not going to price off of my own capabilities, because I did not build this business for me to be the core unit driving its economic flourishment. He said, I created this because I'm going to make systems, and I'm going to invest in human capital, and I'm going to train and enrich these people to create value in the market, which creates value in my own company. Like, do not miss that, y'all. That was literally $1 million of gain. I know people that will charge you $25,000 to say that to you. Last week, someone tried to charge me $30,000 for a more watered down version of that.
No, and that's the thing, because again, what gives me the full confidence and not give a fuck factor of giving out this game completely for free is, like, in my heart, I want for my people to flourish. So for the folks that are wise enough to read between the lines, well, actually, you don't even got to read between the lines. All you got to do is take notes and execute. Like, it's not even is very direct. You know what I mean? So, like, if you just take notes and go out there and fucking do it, you're gonna be all right. You know what I mean? But what gives me the confidence in it is because I know at the end of the week, the client that I'm working with now is getting ready to sign another $19,000 check for the time that his company has spent with me for this week. Just this week. Like, not the month, not the quarter, none of that. Just a 5-day period. In a 5-day period, they getting ready to write a $19,000 check. So it's no question that the things that I'm speaking about are, like, proven factual. Like, it's so in the context of what we're talking about right now, for our classmates that are listening to all of the realities of how the world is changing and all of the things that are kind of happening that are feeding that, what we can control are our own actions. So starting a business is an action that we can control. Understanding how much that it costs in the future state, that's something that we can educate ourselves on. That's something that we can be intentional about. We don't have to be in a space. I put together a pricing model for my client that took into account the actual break even, which break even is oftentimes not even I can't even call it an afterthought. Like, it's a non-thought. Like, a lot of small business owners are not even thinking about break even, like what that even means. The break even is, what do I need to be making within a measured period of time in order to be able to pay all of my bills? and be okay. Absent knowing what your break even actually is, and you just artfully putting together quotes and estimates because it feels good, fool's errand. Absolute fool's errand. But again, to listen to this episode and to recognize, oh, the picture is bigger. So I could be the coldest motherfucker on earth when it comes to whatever it is that person does. It ain't about how cold you are if you looking to grow an actual business. Because when we talk about Elon Musk, for example, he has a lot of, I don't really care for him as a human being, but when it comes to his ability to create, he's a different level of genius, and that cannot be taken away from him. It can't be discredited, like not credibly anyway. Like people can say whatever, but the reality is still the reality. Elon Musk is still Elon Musk. His value don't come from just him, no. He's got a whole bunch of people that are executing the visions that he makes reality. So his pricing model has to take into account all of the people that it takes to materialize his vision. It can't just be him, based off him. Because if it was just based off him, again, he could just be giving it away the way that I'm giving it away now.
Right. And I think Elon, I mirror your sentiment. Don't really care for him as a human being, but I think he's a great organizer. I don't even see his genius being in the tech space. He just happens to be in the tech space because he didn't create Tesla. He acquired Tesla. Like, he didn't create PayPal. He like worked into the team, put himself in a position, and he just worked his face off. Like, he worked 100-hour weeks and then got that huge payout from PayPal being bought. And then he immediately put all that money into Tesla and started sleeping on somebody else's couch because he's like, I want to do SpaceX. So I can kudos him for that level of discipline and sacrifice in the way that he can organize people to get after it with his vision and to influence others to put their capital into his ideas. Like, there are not many people that could get a whole bunch of folks behind them. Like, yeah, I'm going to create these reusable rockets. They go up, come right back down. People are like, what's the use in that? He was able to influence people to put their capital into it and then execute on it most of the time on the rockets, So it's all been a play. It's like even acquiring Twitter. And then he immediately changes the brand to X. And then we see all the news cycles saying he just created this many billions of dollars in loss in the company's brand wealth. I'm missing the term for it. And then I just did a little homework. As soon as I heard that from 5 different news stations, I'm like, this was put out on purpose. I did a little bit of research and I looked at the SEC's website and I saw his request to be able to sell a certain amount of Tesla stock. And it was the exact same number. What does that mean? He wanted to offset his tax liability from taking billions from his shares in Tesla by changing the name of Twitter to X. And initially a judge struck it down because he said, I see what you're doing. This ain't that kind of party. Then we changed presidents, and now a judge came and said, no, I don't know why this was struck down. And it's free game. It's free chicken now. Wild, right? 4-dimensional chess. And then like the other part of Twitter before he purchased it was widely considered the fastest, most unbiased source of world events. When I was learning to trade, I would go to Twitter to look at things so I'd have an idea of what the sentiment of everyone would be around it. And then that let me know if I wanted to buy or sell that day. It was that good. Now, he shifted it over to his propaganda arm to get people elected to certain seats and to drive capital and to do other things that are on his agenda.
Insane. So, yes, that's the understanding the cost of business is absolutely essential to actually building asset via a business that continues to increase in equity or market value. And one of the key components to that, the numbers, because we what separates a business from being a hobby are the numbers. So in order to have a understanding of like what a pricing model can look like, or should look like rather, that derives from understanding cost of goods sold. So when we look at cost of goods sold, which is, as the name entails, it is the cost of the good or service that has been sold. When we look at the cost of goods sold as a percentage of the revenue that is actually being generated, or let me say that in layman's terms, if we're looking at how much that it costs to produce and deliver the sale as a percentage of the money that is being made from that sale, if that percentage number is like continuing to go up, then we either have a problem with our pricing or we have a problem with our efficiency, the consistency in which we actually produce and deliver those products or services. So if we're seeing fluctuations there and we know that nothing has changed on the production side, then we have an issue with the pricing model. Like we can directly see that from the cost of goods sold. So in order to be able to take a look at the cost of goods sold and to have an understanding of if the pricing model is actually where it needs to be in order to produce profit, that boils down to the accounting, the bookkeeping, how transactions are categorized and organized and reported via the profit and loss statement in the balance sheet. So that piece of generally accepted accounting principles, the thing about that conversation, and it's always so interesting to watch how confident that a business owner can be in their defiance to completely like abdicate the responsibility of understanding how that stuff works. And it legitimately is the equivalent of going to a foreign country and you got the language that's being spoken in that country, you got the customs, the traditions, all of the things that makes that culture what that culture is. It's like going and visiting that foreign nation and saying, fuck their language, fuck their culture, fuck their traditions. I don't want to know nothing about none of that. I'm here, we out here. That is the equivalent of operating a business without having a foundational understanding of generally accepted accounting principles, so that you can in turn take a look at your financial reports and know if you are on target or not for profitability. It's not a feeling. It ain't nothing gut or instinctual about it. It's black and white accounting. Like either the math is mathing or it ain't. That comes from understanding the numbers. So again, as we're having all of these conversations about the world that we're in and all of these components that we have no control over, like we can't control that Elon Musk has a direct line to the president and his cabinet and are able to change the rules of the game mid-game to benefit himself and what it is that he wants to do. We can't control that. What we can control, though, however, is our courage to take the skill that we have invested into mastering and make it a fucking business. Make it a profitable business. We can control that by how we approach the game. So again, by understanding the cost of doing business and understanding how to measure that cost of business. Key cheat codes. Nothing about it is rocket science. Like Elon is actually engaged in rocket science. This ain't that.
Brother, that was beautiful the way you broke that down. I know when I was younger, and I would always hear people say you got to pay the cost to be the boss. No one expanded on that. I always looked at it as a character thing. And that's a part of this too. If you're going to be a leader, if you're going to be a founder of a successful organization, you got to take all the arrows in your back first. You got to take all the L's, and your team creates all the W's. Keep them accountable, of course, for their own actions and their own success. But if someone broke it down to me in that manner, I would have had a very different business career than I do now, where I could understand the different levers and pulleys to look out for. And then it makes business a whole lot less scary. I think the average person listening here, they're like, okay, I want to have a business, but I don't want it to be too big. And their fear is either failing these different people that have mouths to feed or the IRS. So I don't want to make too much money and have them feds show up. We are the dynamic duo that makes sure you don't have to worry about either of those things. Where when we have the data, if you're coachable and teachable, and you will execute on expert advice,
Bruh.
you can do those three things, you will never have to be afraid in your business.
I'm DeMarco, bro. Coachable and teachable, man. Coachable and teachable, bro. Like, that's what it takes. And I think that it's like the role that ego plays in so many people's demise, self-sabotage, you know, that it can't be like we can't even accurately calculate what that loss amounts to when we are so ego driven to whatever it is that we believe, that we are not coachable nor teachable. Like in my career, I've been, so Tip got this new song, man. Like, well, it ain't all that new, but I fucks with it. That his hymn joint. You heard it, his song, the hymn joint? Like, you know, I know that that's become like a political conversation, the pronouns and all that. When I refer to myself as him, it ain't got nothing to do with pronouns. It's just, I've just been that. That's in my career, I have been that for a very long time. But in that, I have never been him to the point that I don't have something to learn. Like I always have something to learn. And one of the things that I've learned through being how I am is when a person is coachable and teachable, when they get around the folks that actually know, those folks that actually know will pour into the coachable, teachable person. Like when you walk into a situation with a thirst for knowledge, with a thirst for gaining experience, with a thirst for bettering one's own self, the folks that really know it, they pour the fuck in a different kind of way. And Earl, you kind of alluded to it last week with the networking room that our brother Brian put you into. Like, everybody was pouring into each other because, like, that's the game that's happening at the highest levels. Ain't no competition, bid. Like, it's a bunch of collection going on up there.
Really isn't, bro. When I think about history, if you think about the largest organizations, they ended up making cartels. And I'm not talking about drugs. I know y'all folks hear that word and think of drugs. It's these different bodies moving together so they could price everyone else out the market. Whether that's oil, whether that's been commodities like produce, corn, fertilizer, steel, sugar. We have one of the craziest sugar cartels in the world. If you look up, hey, classmates, y'all got homework. I feel like Ian. Look, I want you guys to look up the price of sugar in the United States and then look up the price of sugar in any other country. Look at Asia, look at Canada, look at Mexico, look at South America. And then I want you to do a little bit of research on why that difference exists. And we'll talk about it on the next episode because there are definitely governmental bodies, there's different contracts to force certain prices. So I feel like we're right about at that time, my brother. Did you have anything else you wanted to bless them with today?
Absolutely. And it's what we speak about every single episode, which is this entire idea and vision comes from the space of recognizing that the two of us have been very intentional about investing into ourselves respectively. And it would be a disservice to humanity and those that we love and care about for all of this game to just remain here and here, which is why it now remains here, open to everyone that is ready to consume and execute. So recognizing all of the wild shit that's going on in the world and all of the justifiable reasons for people to seek being distracted from those things, for those of you who have and continue to invest your time into consuming the conversations that we have with the greatest intent, we are deeply, profoundly humbled and appreciative of it. Thank you for being here with us. This has been my man Earl.
My Jesse.
This is the Asset Class. Thank you for listening.